Good morning. Excuse me. Good morning and welcome back. And today is Tuesday, August 29, 2023. And the Tuesday, the second trading day of this week. And yesterday we have a kind of range day, right? And today, let's see how it's laid out. And we are draw, two key level for the short setup. We believe that you're gonna go to retest this one, right? And for a long setup, the area of the retest also, so the support level and it's the resist level right there. So this is basically a bearish order block right here, and it's a bullish breaker down here. We do that on a 5-minute time frame. You see right there, and you see the gap right there. So we think that the short setup is still playing out, right? It may retest this and go down, and also we see the long setup right here. The bullish breaker, right? Let's retest and go up. So, and we know that when we we learned that when we want to check a position, then we have to consider the opposite setup to see how it's play out, and we're gonna go in with whichever one give it a better risk reward ratio. Let's say we go here and we anticipate here about 65 cents. That's not our, we want more than 165. We're looking for $1 move. So look on the 1-minute time frame, it look like it's bearish. You see right here the rejection right there. You take a buy side liquidity. It's basically it look like a stop run liquidity rated. It's not like a market structure shift right there. But at the same time, you see the sell side they were taken. So it go up here. Yeah, it's confluent this error right there. Let's say, and also at this error, there's so-called supply level right there. So we're not gonna engage anything right now because we see that both the long setup you can see right here, order block, fabric gap, retest. So it's play out right there, and also you see the short setup, order block, fabric gap, retest. It may retest again. So let's see is play how is a play. We want to break out this range in order for it to engage. Let's look at a excuse me 4-hour time frame. So we are, it's similar to 4-hour time frame, right? We see the long setup right here, order block, and then retest right here, retest right here, and retest right here. Also, we have a short setup right here, order block, follow up, and retest. So it basically in restraint right here. And also we pay attention to the Monday 9 o'clock candle right here. We want it to stay above here. So what is the close of this candle for 4258? So that's right here, 4258. We want to stay above here. So I think this one is X4 9 o'clock. Monday. Yeah, we want to stay above this level, which is, coincidence is a it's close to the 930 open right here level, right 930 level. Tomorrow we will have the GDP data release, so that expect some volatility there. One interesting is that yesterday the volume is very huge, 102 million share. However, that means there are lots of transactions right there, but we don't know who's buy, who's sell, but it's a huge volume. But we look at the skew, we saw it's drop. Basically the skew is, measure the volume between the put option and the call option, right? So if the skew is go up, that means a lot of people buy a put option to protect, their position, to hedge their position. However, yesterday, if people buy a lot, then they should hedge a lot, but it's not. So that can give us some signal. Maybe people sell, not buy yesterday then. Well, like someone step in and push up here or the bid right there. You see this order is way up there, and it took just one speed right there. So I think some people call this a back of the book. We could keep and stay in the back of the book. Basically, it's a ghost order in order to try to pull the price up. And we anticipate exactly it's gonna go back to this error right there. So if we're not picky, we can take a quick good, when it go in right here, we retest this one, go in and take a quick profit right here. Yeah, almost $1 right there. You see that? So if we are here, we know that it's gonna go there, and you see that the setup right there, boom, boom right here, and then it make a high low. You see, and right here it take the buy side liquidity, and then pull down here, make another higher low. Wow, we want to break through this supply level right here, so-called bearish order block right here, very strong, right through, and retest them, and boom, keep going. Wow. Okay, so now we see that it's gonna push up now. Let's look at the 1 hour time frame. Okay, so we see the next destination or the next draw on liquidity is going to be this level right there. You see that? This level right here. This will be a bearish breaker, something like that, right here. Right here, bearish breaker. 4466. So we anticipate exactly that error. So we check that error, and you see it take another buy sell liquidity right there. So this buy sell liquidity, it will be a market structure shift, right? It will be a market structure shift because it's close above this bearish order block. Let's say retest here and then boom. So you see the favorite gap right here. So let's see if we test the favorite gap and can go up. So this is the retest for this paragraph here, right? So that's a long sub. Let's see how it go up. So if we go long right here, we identify this is the area draw on liquidity is gonna hit. However, we decide not to engage because we saw it, the distance is not smart there. But if we smart enough, we know that it's only a good trade because it's from break even to profit, right? When you move this distance, you either take early profits, may not be $1, but it's you can move into break even if you want to expect more right now. So we are in 23 minutes now. Let's see if we saw any diversion. We don't see any diversion right now. They pretty much in sync. Yeah, let's take a look at this. Smart money diversion right here. Yeah, we don't see any diversion rate. Make a high. This guy make the high also. So we don't see the diversion right now. It's just be patient, wait. But you can see that right here, buy sell liquidity were taken. I really want to go long right here, but because I see this order block boom and retest that order block, I really want to go long right here. I mean go short right here, but let's see. You see the huge displacement down right there. And you see the sell soliloquy was taken right here or rated right here. If you want to go short, then what's the long setup need to play out? Maybe this bullish breaker, I need to go there. As long as it's above the Monday at that Monday candle at 9 right here, then we know it bullish is gonna go up. So my question is right here, the retracement, it's gonna turn into reversal or just retracement and it's gonna continue the trend, go up. To a huge breakthrough, so I think it's just a retracement, it will go up. Wow. Yeah, I just finished that statement and you see, wow, boom. Let's go up real hard. Oh. Man, it retests exactly that error and just enough to check the sell side will go up. Huge. Yeah, it read this error exactly we saw on the 1 minute time, 1 hour time frame error. Yeah, you see, we point out this error and it did hit that error. Man, you know exactly the draw on liquidity right there. Yeah, this level right there. Wow, look at that. Huge up move. Now you have a short setup player, still player. Right, you short right here because this auto block, boom, auto block right here. bearish, boom, going down. So now it retests that order block right there. You can short them because it's a retest. But if the short failed, then you can go in, do the long. Right? Let's see. I have a, when I look at the way it moving up, I think it have a lot of momentum behind that. That means I think it will break through this order block, and the next level is gonna be go to 46. I think it's gonna take out this buy sell liquidity right here. So what the high of this one? Yeah, 81. 446, 81. Yep, right there. Because you see this huge move right here, right up here, and boom. And now it's just gonna check that. Okay, if gonna check that, it's gonna go down. Right, because you want that to be a market structure. So this is a pullback. So we still have a lot of sell liquidity trap right here. So it go here and it just do a stop run, then boom, it go down to take orders. Sell liquidity here. Wow, look at that. I think we may identify what the high of this one. 69. What up high? 68. So you can see that. I wonder why we failed to recognize this manipulation. But I'm trying to see if that's a legitimate manipulation. Because check the sell side liquidity right there. And boom, it go take the buy side liquidity, and then I pull back right here. And right here, that's the retest. So it's just buy side liquidity up there. Alright, we are in the 36 minutes, and so far we see it break through this error that we are identified right between this level, the bearish order block, the supply level, and the demand right here. And now it keep probably take buy sell liquidity. So we have a huge value gap right here. I think it may retrace back to retest the value gap. Yeah, earlier we wanted to say, oh yeah, we want to go short right here, but it's not. It a retracement or retest to go long. We don't see any diversion yet, so we're not gonna take a short trade here. Right? It's simply because at the top, but patiently wait. Right here you see the huge move from the QQQ. So basically right here we see it's just sell-side liquidity rated or stop run and then boom, go up. So you see that it's retracement at this level right there. It's not breaking down, so it's up move still playing now. Let's see if we go in right here, and our stop loss is right here, 80 cents, 83 cents. And from here, yeah, so basically I'm at 1 to 2 risk reward ratio. If we decide to go long right here, yeah, we see it may go to 446.79, 444. Okay, look at the 4-hour time frame again. We see that there are bullets set up right there. Okay, you see the huge down move right? Excuse me. Here's down move right here, right? And then you see this retracement, and this retracement not check out the buy sell liquidity. That means it dropped the buy sell liquidity here, and now it's gonna go and get it. You see, now it go and get it. I think it's gonna get it, and it also go down, then it go back down to check the sell side liquidity right here. Yeah, we should see that forming right there. You see that buy side of the keyword trap right here, and now it's gonna go and take that liquidity, the buy side liquidity, and this signal for you, this auto block, and then all of this is just a liquidity stop run before it make the move up. Yeah, look at the 4-hour time frame again. We see that we should get a go long right here when it's above the Monday right here. You see above the Monday at night there. When it's above that, when we go long right there, it opens just above that, right? You see it open just above that level. We should go long right there. Yeah, forgot to see that. Let's, take a note on our journal. See right here. This setup it based on a pattern that we observe, right? We don't, it's not based on ACT or DR model at all. Basically, we saw on a Monday, the very first candle, if it up close, then the next day it gonna be retest that a little bit, and then it pull away from there, and then we can go long. So that's the setup that we are monitor, and we see that pattern right there. So we can say right here, we say Monday for our time frame. So what the basic of this setup is just make sure that the X409 on Monday is up close, and we're gonna play this trade on Tuesday. Entry time is you can set 9:30 on Tuesday. So the idea that if the if this is move away, moving up away from the close of this candle, then the entry time is on Wednesday. We see the setup right there. Yeah, we did mention about that this morning, but we don't anticipate, we don't engage at all when it's forming, and it give us a night entry, but we don't. So for this setup, I think we give a we can say Tuesday long at 09:30 setup. So basically we want that Monday 09 and look at 9 o'clock and at 12:13 both up close. Then on Tuesday go long when it's retest the candle at 09:30 right there. Symbol like that. When it retest, just go long. Then yep. So we basically go along around this level right here. You see when it go just below that level, go along. Alright, 3 more minutes, we will reach 10:30. Look at right here, you can see that it's a good pullback for, you know, I think we social liquidity also. You see that it's a, you see, basically boom right here. Wow, it's really go uphill right there. Okay, look at the 5-minute time frame. We can see the DR model forming right now. So you have a mid-range level, you have a DR implied high and DR implied low right there. In this case, it's exactly the same level of the overnight 930. Let's see if it's, yeah, it's close above. Let's see if close above, then we have a confirmation that this gonna be a low of the day. This level. Let's see what the range right here for the DR model of $3.28. I think it's much bigger than yesterday. Yesterday, look at this, tiny. Look at that. Yesterday it's about less than $1. Today $3. That's a huge, you know, move for today. So 2 more minutes we will reach 10:35, where it's gonna be confirmed for us. We'll have a confirmation from the DR model. All right, it's 10:35 now. So now we have confirmation it's a bullish. The bullish, basically this is the low of the day, and this is gonna be the high of the day. I mean, it's the low of the day. That's it. This is the low of the day. So trade according to that model. So if there are pullback around the midrange, then that will be a perfect entry for it to go long. And there are another setup they call retirement setup, which is it tests all the way, retest to the low, and then it bounce all the way back up. So that's the retirement setup. But anyway, time is up. Thank you so much, and talk to you later. Bye for now.